don't forget to smash that like button. And if you haven't subscribed already, click that subscribe button. Trust us, it'll be worth it. Thank you. What is up, everyone? I am Chris Knight, and you are watching The Real Review 3000, here with a little bit of, I guess, news other than the thing that's going on right now. So basically, there's this rumor, or there's this thing that started out there where people are talking about Apple possibly buying Disney. Yeah, whatever. Let's be honest, guys. It's probably not going to happen. So if you think that Disney's going to get bought out and maybe something's going to change, it's probably not going to happen. So just let's be honest about that right now. I have to get honest sometimes. Take the shades off. Let's go over to the reaction screen. Apple could look to acquire Disney amid stock drop, analysts say. So let's get this straight. Analysts say. That's always a great thing. The analysts want to make everything happen. All right. So as we read, mega cap companies with large cash balances and whose equity outperformed Disney over the last 3 weeks, like Apple, could take advantage of the volatility as coronavirus has hit Hollywood stocks. With stock markets battered by the coronavirus and shares of entertainment giants hit hard, some on Wall Street have started wondering if cash-rich technology powerhouses could consider takeover offers for Hollywood companies. Go down here a little bit further. Rosenblatt Securities analyst Bernie McTernan is in a Friday research report, for example, suggested that Apple, led by CEO Tim Cook, could consider acquiring the Walt Disney Company, led by Executive Chairman Bob Iger and new CEO Bob Chapek, after its stock dropped below the $100 mark last week. We believe those with long-term horizons, like mega cap companies with large cash balances and whose equity outperformed Disney over the last 3 weeks, like Apple, could take advantage of the volatility, he wrote, noting that Disney's market capitalization was approximately $165 billion, while Apple has about $107 billion in cash and securities. The upside to acquiring Disney would be securing their content, streaming strategy, and potential synergies from adding to the emerging Disney ecosystem to the iOS platform. Apple didn't respond to the request for comment. McTernan, who highlighted that over the last 3 weeks, Disney has lost about $85 billion, or roughly 1/3 of its market cap, also argued that among other benefits, streaming service Disney Plus could help boost Apple's TV streaming service. Disney Plus could solve Apple's content problem, as we believe Apple TV is off to a relatively slow start, he said. Disney earlier this year said that it had signed up 26.5 million subscribers to Disney Plus by the end of 2019, 28.6 million, and as of February 3rd. Apple's stock on Friday jumped 12% to $277.97 amid a market rebound, while Disney shares rose 11.7% to $102.52. Okay, that's what that one says. But notice, it's analysts talking about it. Analysts talking about this stuff. Analysts don't know crap. Just let you know. They like to think, oh, look, they could do this, and this would be really neat, because look at this, and look at this, and look at this. And they're not really looking at the actual way that right now with the stock market volatility, that no company wants to take on a giant risk at this point. Because any company that's as large as Disney is a risk right now because of the fall that's happening. And this kind of explains it, this one here. Basically, I'm going to go back up here to the top. Disney's stock plunged more than 30% over the last month as the novel coronavirus crisis forced it to shutter its theme parks and postpone its new movie releases. The cancellation of major sporting events will likely hurt ESPN, and the resignation of longtime CEO Bob Iger exacerbated the pain. Now, first off, resignation. I think he just stepped down. I don't call that a resignation even. I just think he was like, you know what, I'm done. I'm just done. Let me before we go any further, make sure that I turn down my ringer. Yeah, I don't think that they're really looking at this from the right perspective. Bob Iger just stepped down because he was done being the CEO and being the executive chairman in charge of the board for Disney is much better and much bigger, so it doesn't really matter. Disney's business should recover quickly after the crisis ends, but Rosenblatt analyst Bernie McTernan recently suggested that Apple should swoop in and buy the House of Mouse before its stock recovers. That idea might sound wild, but it's been floated ever since Disney bought Pixar, led by Steve Jobs in 2006. Now, does the math make sense? Basically, Apple ended last quarter at $107.1 billion in cash equivalents, and marketable securities. Disney currently has an enterprise value of $254 billion. It's doubtful that Disney shareholders would approve a buyout at its current price, assuming that 50% acquisition premium, which would value the stock in the low 140s. Apple would need to fork over nearly $400 billion to close the deal. $400 billion, people. We're talking right now about the federal government giving away $1 trillion in stimulus. And if that goes through, realize that we're talking almost half of what they're going to give America. So we're talking about Apple forking over basically half of the stimulus idea that the United States government is thinking about forking over. That's unheard of, people. $400 billion. It's crazy. That's almost basically sounds like the Star Wars deal. When they offered him $4 billion, I don't think that anybody thought that could ever be done. Now, does that mean this won't ever happen or that this isn't going to happen? No, it doesn't, but it just means $400 billion is a lot to fork over, especially when you don't know when a market's going to recover. And by the time it starts recovering, Disney's going to be out of the woods, and they're going to say, oh, well, no, we're not going to buy, we're not going to sell. Apple would need to fund the deal with a combination of cash and stock. It will also likely need to take an additional debt to close the deal, which would boost its current liabilities to $102.2 billion. Buying Disney in its entirety would boost Apple's annual revenue by nearly 30%. As a percentage of the combined company's 2019 revenue, Apple's iPhone sales would drop from 55% to 43%. That reduction is significant, but it doesn't completely solve Apple's overwhelming dependence on iPhone sales. Apple also operates at higher margins than Disney, which struggled with contracting margins in recent years as cord cutters gutted the higher margin media business. Therefore, acquiring Disney would significantly erode Apple's long-term margins. Disney is currently racking up losses with its streaming services, Disney Plus, ESPN Plus, and Hulu, to lock in viewers, and its integration of Fox's media assets and renovations at its theme parks are exacerbating the pressure. Disney needs to grow in its theme park and movie business to offset those costs. But both businesses are besieged by the coronavirus crisis. Apple, which lacks experience in both markets, could bite off more than it could chew by inheriting those businesses. The risks outweigh the benefits. McTernan claims that Apple could significantly strengthen its Apple TV business by buying Disney. Disney Plus has nearly 30 million subscribers on Disney Plus, and a recent Wall Street Journal report estimated that Apple TV had over 30 million subscribers. Merging the two services could create a more formidable rival to Netflix, which ended last quarter at 167 million paid subscribers worldwide. Uniting Disney Plus, ESPN Plus, Hulu, and Apple TV Plus is in a single platform, which significantly strengthened Apple's services ecosystem, which also includes other prisoner-taking services like App Store, Apple Music, Apple Pay, and Apple Arcade. However, Apple would also be taking on Disney's rising content cost. Disney spent $1 billion on streaming content in 2019 and expects that number will rise to $2.5 billion by 2024. Apple would also need to balance the budget of Disney's massive movie and media ecosystems, as well as the expansion cost of its theme parks and resorts. All those moving parts would complicate Apple's core business, which mainly focuses on selling hardware and locking users into various subscriptions. Taking over Disney's businesses, along with its higher debt and operating expenses, would throttle Apple's free cash flow and its ability to raise dividends or buy back shares. It's doubtful this dream deal would happen. It would be interesting to see Apple merge with Disney, but I doubt it will ever happen. The costs are too high, and the integration would be messy and complicated, especially since Disney is still in the process of integrating Fox's media assets. Apple usually buys smaller companies, and it would be odd for such a tech giant to absorb or abruptly gobble up one of the largest media companies in the world. It would make more sense for Apple to simply secure a partnership with Disney, similar to the one Disney previously forged with Netflix, to expand its streaming library instead. And to be honest, right now, that's probably what you could look for. Apple TV and Disney Plus making some sort of a deal saying, okay, if you buy Apple Plus or Apple TV or you buy Disney Plus, you can either get at a lesser cost or at a combined cost. You can get both. So real quick, guys, let's just break this down. Apple would have to spend $4 billion to get Disney. That's that's the marketable number that they're talking about. And there's no way in hell right now, with the way that the markets are running right now, they're dropping, and it's like the floor is just falling. And there's no way they're going to take on a debt and a cost that big. So with that said, my whole thought process on this, before it even gets going, is no, this isn't going to happen, guys. Disney is Disney. They're not going to sell just to sell. And they've been through stuff like this before. They've fallen, and they've picked themselves right back up. And let's be honest, eventually this is all going to blow over to some extent, and people are going to be able to get back to a normal semblance of life, and Disney's going to be right where they always have been, wanting to take your money. And they know that. So with that said, guys, let me know what you thought of this video. Don't forget to like this video, smash the like button, subscribe, hit the bell, and don't forget you can find us on Twitter right there. And don't forget, right now, until Saturday, you have a chance to win these books. Please go to my Twitter at chrisknight5150, like and retweet my pen post, and you could win these. Saturday, we'll be doing that live, or Saturday or Sunday. I'm not positive yet, but Saturday or Sunday, we'll be doing that live. So keep an eye out for that. And with that all said, let me know what you thought. Put your comments down below. Do you think Disney will be bought out by Apple, or do you think this is just a bunch of smoke to try to kind of take us off the current mess that's going on? Let me know down in the comments below. With that said, guys, I am Chris Knight. This is The Real Review 3000, and I'm officially out of here.
Hey guys, thanks for checking us out. Be sure to subscribe to both channels, and make sure to check out our friends in the Fandom Minutes. You can find us on YouTube, Twitter, Facebook, Instagram, and BitChute, and you can also send us an email at sean@seanstackhousereacts.com and chrisknight@therealreview3000.com. And be sure to swing by our Teespring store to pick up some awesome merchandise.